Okay, good afternoon, guys. This is the Triple D, the DVDM Markets Daily Digest. In the next couple minutes, I'm going to give you everything you need to know and so much more right here, right now. So let's start off with the news. If you have a look at the news in the world today, it's a little bit confusing, but I have a solution for you. So let's jump straight in and let's give it a look. So when we're looking at the news, guys, you're obviously looking for some sort of sentiment. You're looking at, what are the markets telling us? Now remember, please remember, the people that own these news stations also pretty much are the owners of Wall Street, right? So you got to take it with a pinch of salt. But anytime I see this particular instrument, this particular way of doing things, it sends off my spidey senses. So let me give you a quick show, right? So first up, we see Goldman Sachs lowers recession forecast, right? So pretty much Goldman Sachs saying, hey, we have this beautiful Goldilocks system. We're not going to have recession. Great stuff, right? We look at stocks higher as inflation hopes build, right? Saying, hey, inflation isn't as bad as everybody thinks it is. We're good to go. So this all seems super positive. However, scroll a little bit down and we see Robert Kiyosaki saying, hey guys, listen, we're in for the biggest crash we've ever seen, right? The markets are going to crash. It's going to be doomsday, right? So what do we do in a situation like this? Super simple. As I've shown you guys, price action's king. Let me show you some charts that will blow you away. And I'm pretty sure we're going to have a massively profitable week this week. So let's jump straight into it. Okay, so first and foremost, as always, let's jump into the dollar and let's have a look at what the dollar is currently doing. As we've seen with the data over the past week, guys, the dollar is currently depressed, right? We've seen all those fundamental data events smashing the dollar towards that downside, right? So having a look at that, I'm looking at a potential dollar recovery. And I say this because I'm going to show you this in the next couple of charts, right? When we look for confluence, we're looking for confirmations in other charts, in other markets that are saying the same thing. And I'm going to show you in a second why that is. So let's switch over to EURUSD. This is EURUSD on a daily time frame. And I just want to show you the current state of the market that EURUSD is in, right? We've got this nice, neat, beautiful structure. Looking at Fibonacci, we are adhering to all of the Fib levels currently involved. However, we are now approaching that 61.8. I'm preparing for a potential order to short EURUSD towards the downside as I play with this channel, because again, as you guys know, with Fib levels, once we hit a Fib level, we pull back to the next support zone before we make some sort of breakthrough to the next level. So I'm looking at a short on that 61.8 on EURUSD, currently around about that 1.12, so meaning €1 buying you $1.12, right? Now again, what does this mean? If EURUSD goes to the downside, this means that the dollar is going to gain some strength. For the EURUSD to sell off, the dollar means it needs to gain some strength. Now, there is a potential catalyst that could do that for us today, as soon as today, not tomorrow, not next week, but potentially today. And all we need to do to find that is just to switch over and have a look at some of those fundamentals. So what we can see coming up this afternoon is we got some retail sales data due for the dollar. So what is retail sales data? Right, this basically shows the spending of retail consumers in the US. Now, why this is monitored so closely, people don't spend money if they think it's gloom and doom and the economy is going to crash and oh no, and right, when people spend more, right, it means that they're more optimistic about the general economy and their own personal financial future. There's been a couple articles that have come out in the last week showing that US consumers are super confident more now than ever about the US economy, and this is a massively good thing. So looking at this, if we see a higher than expected reading, which economists are already predicting will be higher than the previous month, we could then see a massive boost to the dollar. Now, how can this further lead to trade opportunities? Well, let's switch over into gold, and here's an opportunity that I'm very excited for. I'm preparing these trades. Now, again, if you want to be part of this, you want to get this signal or this trade as I take it, as I send it, you want to be part of DVDM Markets Premium Plus. For less than $1 a day, you can get amazing trade opportunities and special live broadcasts when we trade special shows and special events. Link down below. So let's just look at gold quickly. 30-minute time frame, we are approaching this multi-resistance level. Now, should we get that dollar strength, we will reject this level and break the slightly smaller structure. Now, at the moment, gold is sitting at $1,962 to an ounce of gold. Now again, weaker dollar data could allow us to break through the ceiling, and then the sky's the limit, right? We could potentially start moving into that $2,000 to an ounce of gold territory. However, Should the dollar overperform this afternoon, should we get that strong retail sales data, you know what's going to happen. We're going to see a bit of a sell-off here. So prepare these trades or prepare these signals. If you're in Premium Plus, I will be sending it as and when that data hits the floor. For those of you who love your indices, I'm looking at USD. This is a 4-hour time frame. We're currently sitting in a range. I'm not looking to buy in this range, even though we know we're in a bull territory. And I'm going to show you this again on NASDAQ. However, I'm looking for that dollar strength to get a bit of a pullback so I can get a deeper entry lower down. My entry that I'm looking for is close to that 34,500 mark. This is where I'm looking to go long on US30, otherwise known as Dow Jones. Now, very interestingly, I want to show you US 100, otherwise known as NASDAQ. I'm switching to a daily time frame just so I can demonstrate to you the power of the indice markets, right? As you guys know, 2022 was one of the worst years in the last 30, 40 years in Wall Street and financial market history. However, have a look at what we've done already in the first 6-7 months of the start of this year. We've already recovered almost 82% of that value. Now, this does two things. It allows us to use Fibonacci, right, to plan our entries and exits. And as you guys know, with Fibonacci, it's a great tool to look at breaking through, finding support, targeting the next level, and then breaking through, finding support, targeting the next level. So where are we right now? On a daily time frame, it'll show us that we are approaching that 88.2. Now, we could, as with tech being tech, we could spike to that 88.2. However, with a stronger dollar, this could potentially give us an opportunity to pull back down into that $15,300 mark to potentially then get long to then break through at 88.2. Now, guys, I said it earlier in the year, are we in the next bull market? Clearly, based on what we're seeing on Wall Street, based on what we're seeing on NASDAQ, we certainly are, right? When I spoke about we're in the next bull season in January, February, people are like, I don't know, I'm not sure. The data's there. The proof is in the pudding, and the numbers don't lie. We are certainly in the next bull run. It's about how do we get into the next bull run? Do we get into the bull run already breaking through resistance? Or we're looking for that pullback? Are we looking for that reverse pullback strategy to get long? That's the key. Now, again, Premium Plus as well, I'll be sending my trades as and when I take them. If you want to be a part of that, super simple, less than $1 a day. Link is in the description down below. Before I show you the next chart, guys, remember, HFM is offering to the DVDM community only the opportunity to get 100% deposit bonus. That is both an equity bonus and a drawdown bonus that you can trade. Meaning it's not one of those silly bonuses that you put some money in, they give you a bunch of money, bunch of a bonus. The second you lose some money, they remove the bonus and you're done and dusted. This is a tradable drawdown bonus valid for the DVDM markets community only this week. Again, you want that, link is down in the description below. Open your account, get funded, grab that $500, guys. It's almost 10,000 Rand to potentially take you from where you are now to where you know you want to be. Now, up next is another interesting one, and I want to show you this. This is going to be USD ZAR, a very, very interesting trade opportunity. As you guys know, USD ZAR has been trending high. You know, we've obviously hit that 19 Rand 90 to the dollar middle of this year, start of June. But we're in that pullback territory, right? Now, again, this is mostly due to the weaker dollar. This has got nothing to do with the Rand gaining any sort of strength in any way or form, because we know the South African Rand fundamentals are pretty broken. I'm looking at two potential entry points right now at 88.2 in terms of that pullback, which is currently sitting at $1 buying 17 Rand 95 cents and 81 pips to the dollar. But I'm also looking at a deeper entry right down here, and that is going to be at 17 Rand 74, right? So again, as these trades mature, I'll be popping out these orders to the DVDM markets community in Premium Plus so that you can get these exact entries. Now, these are going to be some swing trades. So meaning these are going to be trades we're going to be able to hold for days, if not weeks, if not even months, because I want to get into a bit of diversification that through the signals we can scalp, but we can take some longer trades. So again, this is part of getting that triple D, the DVDM Daily Digest, absolutely free, available to you. If you want to jump into the groups, you want to be part of our communities, links are all down in the description below. As always, trade safe, be safe. I'll see you guys on the other side.